Hey everyone, now that both Home Depot and Lowe's have reported their latest earnings results and I've had a chance to analyze each company's earnings, I'm updating my recommendation for which one is the better dividend stock to buy, Home Depot versus Lowe's. In this video, I'm going to compare the two, look at their short-term prospects, what happened in the most recent quarter. I'm also going to look at their long-term prospects, their profit margins over the longer term, and then finally I will compare their valuation and then answer which one is the better stock to buy. I'm going to try to do that all under 6 minutes in this video here, so let's get right into it. In the most recent quarter, Home Depot's revenue decreased by 4% to $37.3 billion. This follows a couple of years of booming sales as the pandemic fueled home improvement spending. The decrease caused earnings per share to fall to $3.82 from $4.09 in the same quarter the prior year. The disappointing results caused management to lower their expectations for the full year to a sales decrease of 3.5% and an earnings per share decline of 10% at the midpoint. Lowe's, for its part, experienced very similar trends to Home Depot, and that's not surprising. The two are often experiencing the same macroeconomic factors. Revenue of $22.4 billion was down from $23.7 billion in the same quarter last year. However, Lowe's earnings per share increased to $3.77 from $3.51 in the prior year. Lowe's anticipated the decrease in sales and was able to reduce SG&A expenses by $500 million compared to the same quarter last year. Still, Lowe's also decreased its outlook for the year. It's expecting revenue now of $88 billion, down from the previous estimate of $89 billion. It's also lowering its EPS outlook to $13.40, down from $13.80 from the previous outlook. So Lowe's and Home Depot experiencing a headwind from this changing consumer behavior. Finally, it's happening, the decrease in home improvement spending. Investors were expecting this for it seems like 6-7 quarters now, ever since the economic reopening really gained momentum. And finally, the two home improvement retailers, after booming during the pandemic, are experiencing a moderate pullback. Longer term, looking at the operating profit margin of Home Depot and Lowe's, Home Depot has always had an advantage going back all the way to 2014. In the purple here, you can see Home Depot's operating profit margin well ahead of Lowe's, and even most recently, Home Depot's operating profit margin holding better at 15.2%, while Lowe's experienced a big step down to 10.6% as the slowdown in revenue growth gained momentum. Comparing these two companies on valuation, you see a very similar trend. Home Depot has persistently traded at a premium price compared to Lowe's, partly because of the fact that Home Depot has consistently operated at better profit margins compared to Lowe's, so investors are willing to pay a higher price for Home Depot stock. Most recently, looking at the forward price to earnings ratio, Home Depot is trading at a forward PE of 19.1 compared to Lowe's, which is trading at a forward PE of 15.24. Deciding between these two excellent home improvement retailers, in my opinion, is a close call. It's not an easy decision because Home Depot's outperformance compared to Lowe's is made up for the fact that Lowe's is trading at a significantly cheaper valuation compared to Home Depot, and almost 20% discount compared to Home Depot. However, if I had to choose today, the better buy, the better dividend stock, the better home improvement stock to buy right now, in my opinion, is Home Depot. If I had to pick one stock to buy between these two, I would pick Home Depot today. Alright, but that's all I've got for this video. I was able to get it to you in under 6 minutes. Thank you so much for watching, and I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.